Going on, you guys? Q here from Hyperstocks. So today we're going to talk about something called trading ranges, and this is absolutely my favorite tactic to hack the market or to find perfect setups for people to trade and for myself to trade. Now, trading ranges are not really commonly mentioned in the market, so this may be a one-off strategy, but I will tell you that most people subconsciously will use them as they become more and more professional in the market, and they fail to realize that they're doing this strategy. But all along, if you start to realize that this is an actual strategy, then you might be in for a lot of success and luck on the market. So before we get into trading ranges per se, let's go ahead and try to break down this chart together. This is Microsoft chart as of September 24th, 2020. I'm sorry, September 25th, 2020. So right away, we can notice that there's a big sell-off on Microsoft. It was obvious that the market hit a top and then it came down because of this negative divergence that we saw on the RSI, and the market completely fell apart and the chart fell apart. Now, a lot of people will be scared at this point and they won't understand when it's a proper time to get back in for the stock. To do so, you need to zoom in. You need to look at the day-by-day movement that the stock has had and try to understand the mindset that the buyers and sellers are going through. With this case, in case of Microsoft, you can see that the stock dropped from a high of 230 all the way down to 197 at this point. So we've now gotten the top and the bottom. So now we can draw that the most significant resistance we have on this specific chart at this very point is going to be 230, and then the most significant support is going to be 197.60. So now we've discovered the most important resistance and support within our large trading range. Now, within this large trading range, we have smaller trading ranges that we can go by, or that we can fixate our eyes on to understand that the stock will likely not shoot straight back up. That's very unlikely to happen. The stock will likely make some moves, up, downs, or it may continue on a downward spiral, but it may move up, down, up, down, up, down until it finally reaches the top of the trading range, which it will test for a big breakout or a blue sky breakout. Now, with that being said, we have to focus back on the smaller picture. So where else are we seeing, if we look at this entire chart, where else are we seeing a significant resistance or support? And this is based on the most recent large trading range by Microsoft. This is a 2-hour candle chart, if you're wondering. We want to look back to a time where Microsoft saw a little bit of tension between buyers and sellers, and that's going to be all the way to the left side, right over here, right at 217.50. So now we've established that 217.50 is also an important support or resistance for the stock. It was once a support after the stock broke out of it right back in August. The stock broke out and then got rejected at 232.50 and came back down. Now notice when it came back down, the stock had struggled right around this point. So that resistance that was created earlier, or support that was created earlier, is still significant for the stock. So it tried to get back over it at one point and it couldn't, and it even came back up but failed below it. So that's why it's important to give leeway to your resistance and support point, and it got rejected below it. Therefore, we want to reestablish this support or resistance at this very point where it got rejected on the way back up. So now we know that there is a resistance for Microsoft right in the center of that large trading range, right at 215. So now we've established that 215 is also a resistance, and it's a resistance because the stock is trading below it. If the stock was over it, then it will be a support. So now we've established that this is a resistance. Now we want to look at the chart even further and see if there are any other resistance and support points that we're noticing, and one is going to be right below at $212. So we have another one at $212, and we have another one right at 250, 207.50. So now we've established multiple trading ranges within the stock. We've established one, this is going to be our largest trading range and also the most risk. So this is the highest risk trading range because the stock is so close to that significant support of 197.50. The stock is so close to that point, meaning that if you enter here, your most significant resist or support is going to be a very significant one, because if the stock breaks below 197.50, that's the lowest low that it's established within the sell-off. So now we have a important support that it needs to hold before the stock completely dies, because now a lot of stop losses and a lot of people who bought the stock up to that point will be selling off and bringing it down to the next significant support of 190 in this case. Now, when is a proper time, or when is a lower risk time for us to enter the stock? The lowest risk time to enter the stock is going to be above the resistance of 215. That's because this is, if we look back in the chart, this is the most significant resistance that the stock has had in terms of a breakout since back in July, August. This is where the stock had its big breakout to all-time highs. So we want the stock back above that resistance for us to enter it safely on the way back up. If you enter anywhere below, it's going to be the highest risk here because your support is at 197.50 and it's very significant. If you enter here, it's medium risk. It's not as risky, but you have a trading range between 207.50 and 212 for the stock to consolidate at, and you need it to stay above 207 in this case. Or the lowest risk trader will go ahead and enter the stock above 215 and allow consolidation at this point, because now if you enter above 215, you have 1, 2, 3, and 4 strong supports below your position that allow you to ride it comfortably on a position trade without having to pay too much attention to the day-by-day picture. At that point, if you look at the daily candle above 215, you can clearly see that the stock had made a significant move over 215 when it had its big blue sky breakout. So with that being said, if the stock fell back below it, you automatically know that all the people who bought it up from this point up to above 215 have now let go of their positions and brought it all the way back here, which is not a good look for the stock, because now it's lost its most important buyers that took it to all-time highs, and now it's back into the trading range below it between 196 and 216, which you can scale back as much as you want. You'll see that the stock always makes different trading ranges. Here in this case is going to be this one, and then you have this one, and then you have this one. And notice how within these trading ranges, it's not going straight up. The stock has days, this is the daily candle chart, where it goes up, meets the resistance, comes back down, meets the support, goes up near the resistance, comes back down. You don't want a stock that shoots straight up because that's an unsustainable move. You want a stock that consolidates, gives you entry and exit points within the trading range, and then you can move on to a breakout play. Then you can range trade it for a while, and then you can move on to a breakout play, and you can range trade it for a while and move on to a breakout play, and so on and so forth.